Yes, great. So I guess it probably
Hi,
just
everyone.
while everybody just introducing themselves for a couple of minutes before we, amongst ourselves, just before we open up to the public. Because I don't think Matt, Phil, and Fionn, you've not met each other, so this is the first time. So Phil, do you want to start? On my screen, it'd be Phil, Matt, Fionn.
Sure. Yeah. So hi all. Well, my name's Phil Redgate. I am a senior manager in the corporate finance team at Bishop Fleming. So covering owner managed businesses across the Southwest and Midlands. So my role is really in the CF team, advising our acquisitions, lead advisory on sale mandates, fundraisers, and advising management buyouts. So my core role.
Perfect.
Morning, guys. So Matt West, local business manager for Metro Bank in Bristol. I look after 170 clients in and around Bristol and the Southwest, primarily in the SME space, so 1 million plus turnover. So properly been in the heart of all things Civils and Bibbles over the last C-bills and the bounce back loan over the last 12 months.
Good.
Very nice to meet you both. My name is Finn Travers-Smith. I'm the head of culture and customer strategy at Avon Mutual, which is a new retail bank for Bristol and the west of England. We're in the startup phase, doing our banking license applications. So I'm involved in sort of every aspect of the business, basically, including product development and customer targeting. So that's where my role comes into contact with SMEs.
Great. So I think we've got, for those, I think I explained what I do, but I'm a finance broker, so I'm working with the alternative finance market, and all the business I've done over the last few months has been C-bills loans. I've had a few inquiries, people looking at bounce back loans, but I'm not involved with those. I just give advice and then move on. Most of those have been referrals to Metro Bank, as it happens, Matt. Yeah, I think. Yeah. So in terms of the session today, we have got people registered, and what we've done in the past is we've sort of talked as a panel for the first sort of 20 minutes, and then sort of opened it up to the audience. In the past, we've had accountants join us, we've had other lenders join the discussion, and just really then you make it a bit more of an open forum. I think as of this morning, there was 4 people registered, I think, Pete?
So there are 6 registrations, 1 duplicate, so 5 in total.
5 in total. So we'll see, if all 5 turn up, that'd be great. But so the idea is obviously you've got your own company's hats on to a certain extent, but sort of take them off if you can. The last session I actually ran was on trade finance, and we had 2 direct competitors on the call, and it was actually quite interesting. The call changed over the period of an hour. To start off with, one of them in particular was it was his first panel event of any sort, so he was a bit a bit nervous anyway. And I think he was a bit like a rabbit in the headlights with his, basically it was the head of underwriting for one of his major competitors, who obviously got a lot more experience than they had. But after about 10 minutes, they sort of settled down, and it worked quite well, because both companies actually had different strategies when it came to different things. And we ended up talking a lot about the things like financing PPE equipment and stuff like that, and some of the joys they'd had in some of the people doing those sort of things.
It's worth noting, obviously, this is being recorded and then edited, and then we'll put the link up, and this creates part of our library of ongoing use. So while we will have a few people join us and be in the discussion, this is about creating a resource that will be used ongoing for ages. It'll be far more people in the end will get it and get a picture on it than the people here today. One of the bookings in, and only came in this morning, so I suspect he'll be here, is Mana. Mana Singh is he's part of the economic development team in South Gloucestershire. Some of you may know him, and he's our lead partner for the show down there. So he's obviously got very much on his radar the businesses in South Gloucestershire who are now looking at the recovery going forward, and South Gloss ED, Economic Development Team, are as one of our major partners, will be one of the major users of the library of this going forward. So this is, I mean, there is an element of sales pitch here. Obviously, we want to know who you are, and you've got you've given up your time and energy. Absolutely, put your best foot forward and tell everybody about your business. But the core driver for this discussion is about creating a resource to be used. Is that fair enough, Richard? I think that's probably the way it goes, isn't it?
It absolutely is, yeah. So that's, I mean, that we've repeatedly used the last three. I think this is the fourth finance session we've now run together, and yeah, I certainly still promote the other ones we've done, and it'd be my goal to break. If some of this discussion can be broken up into sort of bite-sized chunks of 5-10 minutes, then I think that's what we'll also try to do that as well, because I think that yeah, that makes it more digestible, if you think, rather than 3/4 of an hour. So in terms of the way I'd like to just run the session, if everybody saw my email yesterday, it's basically round robin introductions, do it same sort of order as we've just done. Position yourself, your experience, and then I think we'll have an open discussion about what the last, well, it's now 12, I guess it's 9 to 12 months that we've had of COVID, what it's sort of been like, particularly over the last 6 months, and then looking forward, sort of how you think businesses are going to open up over the next few months, and then the lending and borrowing sort of environment that we're going to face as Seaballs disappears. I mean, I think we could toss a coin whether or not the Chancellor will say that he's going to extend it again for a couple of months while whatever is going to replace it is coming back, or whether he's going to actually kill that program at the end of the month. But I think the lending environment's going to change, and I'd like, particularly Matt and I guess Phil, you some of the things you're working on must have a longer time scale than just the end of March, what we're expecting. And I guess Finn, as part of that discussion, you're obviously doing a lot of research, because when you actually do come to, as part of your discussions with the FCA, they'll be interrogating you about, how you're going to bring something new to the market, particularly for the Southwest. So
I've got somebody in the waiting room now, so I'm going to admit them, and we'll just we'll stay casual for a minute or two, and then we'll force the break. So just let you know, but by all means, carry on. We've got guests coming in now.
Okay. And then in terms of timing, I know Matt and Phil, you've both got your meetings at sort of 11:30. So I'm looking to bring the discussion to a close sometime between 11 and 15. I'm not going to say definitely 11, because if there's some lively discussion on, I'd like to just let that complete, but certainly allow you to get to your, if we say 11:15, hopefully that's okay with you both.
Great, thank you.
Yeah.
Welcome, Sue. Good to see you.
Morning, Pete. Morning, Richard. Morning, everyone.
Hello, Sue.
We're going to just take a break of about 10 seconds, 15 seconds in a minute to start the meeting formally, for the purpose of the people who edit the recording afterwards. So we're 10:15 now. So Richard, are you happy to sort of effectively get going in a moment now?
Yes.
Right. In which case, is it you? I'm just looking to my notes. You're going to kick off. Do you want me to say something at some point, or?
Yeah, I was because I think
you need to kick off.
If you kick off, I think with
Okay.
sort of house rules. That sort of thing.
That's fine. Okay. So if we all just stay quiet. I've got Manor. I'm just going to admit Manor, actually, just to get him in, so he's here at the start. And then once he's in and sorted, we'll go quiet for 10 seconds, and then we'll go. So just joining. Anyone else who joins, I will just quietly admit in the background as we go. Hi, Manor. Can you hear me?
Hi, Pete. Morning, all.
Morning. Right, now you're safely in. We're just going to go quiet for 10 seconds, then I'm going to open up so that when Jill edits it, she can see where the start of the meeting is.
Okay, thank you.
Good morning, everybody, to one of the first meetings of Business Insights 21.2 with a South Gloucestershire focus, and we welcome you this morning to our Access to Finance Forum. It's been a great lead into this. We've been working with South Gloucestershire for many years. We would normally be doing this beside a live location event based at the Bristol and Bath Science Park, but for reasons due to COVID and everything that we've all been through for the last year, clearly that can't happen. Business Insights has come along in that time, and we've managed to put many of these things online. So the entire of this South Gloucestershire Focus Festival of Business Innovation is going online, and this is, as I say, one of the very first meetings of the 2 days. So welcome everybody watching me either live now on the ground or when you see it on catch up, so to speak. I'd like to welcome Richard Holling. Richard's going to be our chair for the day. Hopefully you won't hear much more from me. It's Richard's show. Richard will in turn introduce everybody else, plus we've got a couple of guests here, and we'll see where it goes. Richard, over to you.
Thank you, Pete. Oh, so I'm Richard Holling, and by way of introduction, I'm a commercial finance broker. So I help small businesses get access to the alternative finance market. So that's not the big banks. Before that, I worked in IT, and working with Pete, we've put together a panel today, which I think will be of interest to most people. It's got a good combination of national brands and local representation, which I think is perfect for the show. So I'm going to ask everybody to sort of introduce themselves, and as we've only got a small audience today, I think Sue and Manna, I'll probably ask you to just say a little bit about yourselves as well, so that we can make sure that we meet any expectations that you have for the session as well. So Phil, would you like to introduce yourself?
Thank you, Richard. Yes, good morning, everyone. My name's Phil Redgate. I'm a senior manager in the corporate finance team at Bishop Fleming. Bishop Fleming's a full-service accountancy firm with offices across the Southwest and the Midlands, and we generally advise owner-managed businesses as our core client base. My role is really advising clients on making acquisitions, disposals, selling their businesses, fundraising, whether that's debt or equity, and also advising on management buyouts. So that's me.
Thank you. Matt?
Thanks, Richard. Morning, everyone. So my name is Matt West, local business manager for Metro Bank in Bristol in the Southwest. Metro is the first brand new high street bank in the UK for over 100 years, big focus on service and convenience. And as part of that, I look after our SME clients in Bristol primarily, but cover all the way down to Cornwall.
Thank you. And Finn?
Great, thanks Richard, and welcome, good morning everyone. My name is Finn Travers-Smith. I'm the Head of Culture and Customer Strategy at Avon Mutual, which is a new retail bank focused on ethical and sustainable operations and creating social environmental impact. We are seeking our banking license at the moment, so a big part of my role is designing our product suite and our proposition, including for SME businesses who are going to be a key target customer group for us.
Thank you. So I want to just set that, sorry, yes, Sue, can you just say a few words? Introduce yourself.
Yeah, sure. Hi everyone, my name's Sue Marchant. I head up the team at Core Ventures. Core Ventures are currently, we're 2 months in now to delivering the South Gloucestershire Business Support Service. So over the next 2 years, we'll be supporting probably around 1,500 small businesses. And pre-starts, many of which will be looking for some sort of finance to help them start, develop and grow.
Oh, terrific. Is that one of those EU funded programs?
Not EU, no, it's a UK funded programme.
Okay, all right, because surprisingly, I think the EU is still funding a few of these sort of startup and business growth programs around the UK, even though we've left.
Yeah, it's sorry, Richard. It's part of the Universal Business Support Programme, which is a West of England Combined Authority initiative. So it's delivered in partnership with South Gloucestershire Council within South Gloucestershire.
Okay, I've worked with Oxford LEP and a couple of the other LEPs in the past. But, Okay, Mana?
Good morning, all. Yep, Mana Singh, South Gloss Council, Economic Development Team, primarily working within business support. As you just heard from Sue, we're working in partnership to deliver the South Gloss Business Support Services. It's actually funded by, through the West of England Combined Authority through what we call the Productivity Challenge, large sum of funds, national funds coming through central government. My remit, as I said, is very plain and simple. It's supporting businesses, and we work in partnership with various other organisations, the likes of the universities, working on some other EU-funded and national-funded programmes. And as I said, currently at this moment in time, as you can imagine, substantial support going towards supporting businesses financially with the business grants that are being offered through local authority. So very, very busy. And we see this as part of the recovery plan, part of the overall support package to businesses at this time.
Okay, terrific. And right, so I think we've got a representative group here that I think should be of interest, and obviously Matt, Finn, and Phil are within the region. I'm slightly out. I'm over in Berkshire, but I must admit I'm growing more and more fond of the Gloucestershire and area. The more I talk to Pete, and I'm looking forward to coming down there a bit more often once we get through the current epidemic. Okay, so I think I want to kick off with a bit of discussion about what businesses have been facing in terms of access to finance over the last 6 months, and that's my personal experience has been absolutely dominated by the government-backed schemes, and I've got a few statistics here just to remind everybody how big that that scheme has been. That as of the end of January, the British Business Bank had worked with lenders to provide £71 billion of loans to small businesses, of which that was 44 billion bounce back loans. So they're the ones that are 100% guaranteed up to £50,000, which were very, very accessible. I really launched because the CBILS scheme, although a good scheme in itself, it was a bit of a scramble to get the scheme up and running, and lots of misunderstandings about how easy it was to actually get those loans. And in terms of CBILS loans, there's been just over 20 billion pounds worth of CBILS loans as at the end of January. And then for the slightly larger SMEs, there was £5 billion pounds of loans. So, a massive amount of borrowing, most of it guaranteed by the government, certainly everything up to £250,000. There was no directors' guarantees, and it certainly has provided a lot of support. So, that's the environment. Just what I'd like to do with the panel is just, if you could talk through me some of the businesses perhaps that you've helped with those programs, or the what you've seen that money actually be used for. So Matt, I know Metro Bank in particular are a big player in the bounce back loans market, and I'm sure, Phil, a lot of the activities that you've been doing has been funded by CBILS. I guess bounce back's a bit small, but if you could just give some examples of where you think businesses have been supported by those loans, would be helpful.
Do you want to go first, Phil?
Yeah, sure. Thank you. Cheers, Richard. So I think generally the last 6 months, as access to finance has been pretty good, I'd say. The numbers you just rattled off just demonstrate that. And initially, when this time 12 months ago, I did a lot of work supporting clients to their first CBILS raises. I think initially some sectors the banks were still very wary of. We had clients in the event space and retail that really struggled, but other sectors nowhere near as much, and some of those businesses have been flying really over the last 6 months. I've got a client who we did a management buyout. It's in the commercial vehicle space, and they've had a really successful last 6 months with the demand for everyone wants a van, don't they, to go and work for Hermes or Amazon or whoever it is. So they've performed really well. I think the challenge for them now is that there's a supply chain issue because of all of this demand, and the lead times for vans have stretched right out. So it might be that they're looking for a CBILS facility just to shore up cash flow over the next 6 months, because there's a bit of uncertainty as to what those challenges are going to bring, which is sort of a knock-on effect a year down the line from the original pandemic.
Yeah. Okay. So would you say that you said that access to finance has been pretty good? I mean, does that mean that the CBILS schemes and bounce backs have worked, or you're seeing that the good companies have just been able to continue in terms of their borrowing requirements anyway with the more traditional loans?
Well, it certainly seems that the CBILS and bounce back, certainly the CBILS, from my perspective, have been successful. A lot of clients have taken the opportunity. To be honest, I think there's a lot of clients that have taken the cash and have just parked it on the balance sheet for a rainy day. I've seen quite a bit of that. Businesses taking a facility maybe 12 months ago that still haven't used it, but they're holding on to it because there still is so much uncertainty as to what's going to happen. But again, we have had other clients utilizing non-CBILS products still, clients making acquisitions. The big focus has been around what the actual impact of COVID was, and especially the sort of Q4 last year, things started to stutter towards getting back towards normal. But yeah, a lot of sectors, it's not quite clear if that is back yet or if there's still more trouble to come. So, and that's definitely the case for sort of retail hospitality businesses. But
yeah, okay. Well, we'll cover about what's to come in a little later. Matt, what's the experience been with Metro Bank? I mean, you said you've got 100 and something clients, so I guess what's their experience been?
Yeah, so I guess as a bank as a whole, Richard, I guess to frame the scene, we've done over £1 billion worth of CBILS and BBILS and CLBILS, or the Corona Large Business Interruption Loan Scheme, versus we have just over £12 billion worth of lending. So what's that? 8% of our lending book is in the government loan space, and that's come about in the last 12 months. I think we initially saw a major surge back in the back end of March, heading into April, May last year. Then it kind of petered out as we moved into the summer in terms of demand. We then saw another increase or a spike in demand around October, November time as we moved into the next version of lockdown when we locked down in November. And then we had another initial surge in the new year when the original end date was set to be the end of January. So that's what I've seen in terms of demand. Such a broad variety of different experiences of the CBILS scheme, I would say primarily, as is always the case for any kind of lending. My personal experience in talking to our customers has been that banks are naturally the cheapest funder in the market when it comes to CBILS, but they probably have the strictest criteria when it comes to CBILS, because we have to assess for affordability, whereas the alternative market on the opposite side of things tend to be a little bit more accessible, but naturally you pay a slightly higher rate. A huge variety of difference of experiences of how people have used the funds. So one of my customers will, in the hospitality space, will potentially triple their turnover this year, moving from £500,000 up to just under £1.5 million is their forecast turnover to the summer of 2021, and that's purely in the hospitality space because they've gone on the back of digital and social media marketing, as well as building a bit of a cult following. Likewise, as you can imagine, we're starting to see, and I know we'll talk on the future in a minute, but we're starting to see people come back to us saying, well, we took the initial funding in March, April, May, June time. last year. We're now coming up to the end of the 12-month repayment holiday. We're now looking at, well, we're not really trading any more than we were 12 months ago. If anything, we're in a worse position, and now we have to start paying back. The bounce back loan is £884 a month, or if you took a 250 grand Sybil's, it's something like £4,000 a month in the next couple of months, and they're really still trying to find their footing. So it'll be interesting to see what comes next.
Yeah, I mean, I think that's one of the fears that a lot of people have had, I think, about the Sybil's and bounce back loans, which is, all you've done really is kick the problem a little bit further down the road. Personally, I think the government knew that, and I think what they didn't want was just a big, wave of redundancies and then having to cope with all that on the social security side of things, a year ago. But we will see. Finn, it's probably a little bit unfair to say ask what your lending experience has been over the last 6 months, but I think from a different perspective, or a different question might be in a similar vein, is obviously you're doing a lot of research on what the needs are for businesses. And how has your, you've obviously been looking at the market. Has your changed over the last 6 to 12 months? Have you seen how the banks have reacted to the epidemic?
Yeah, I think it's a really interesting space to be following over the last 12 months. I was interested to hear what Matt had to say, because I think my view is very much, as with many areas of COVID impact, is that there are the winners and losers when it comes to these kinds of. I think Matt's answer kind of demonstrated that. We've recently conducted quite a large survey with SMEs based in the west of in the southwest, so including the west of England, our patch, and also further south. We found that only about 68% of businesses said they weren't in any need of credit over the last 12 months. So the vast majority of businesses aren't borrowing or haven't borrowed, whether they're on furlough or sort of gone into deep freeze or been able to carry on through the pandemic. But of those that did apply, about 12% of businesses said they were in need of credit and didn't apply. And the main concerns there were fear of rejection or that the credit would be too expensive. So I think there is a cohort of businesses out there that, despite government support, despite the availability of credit for some types of businesses with some types of profiles, there is a kind of a pocket or a niche of businesses that aren't being served so well in that way. Previous estimates of the size of so-called would-be seekers of business lending were in the kind of 2% mark in the SME Finance Monitor. So for us to have found 12% of local businesses, and this is particularly SMEs, smaller micro SMEs included, saying that they had access to capital issues was a bit of a surprise for us. But one other finding that I thought was quite interesting in relation to this question was that we asked a series of questions around how businesses reacted to the pandemic, and the most popular answer on that question was obviously seeking government grants. Just over a quarter of businesses said that they'd sought government grants, and the third most popular answer at 15% was applying for CBILS and BBILS, but the biggest answer was none of the above. About a third of businesses have not done either of those things. So again, I think that kind of demonstrates that there's been some winners and losers. The suggestion is if you haven't taken those actions, or if you haven't spent some or all of your reserves, which was the second most selected answer, then the implication is that perhaps you're doing relatively well, or that things are kind of ticking over. So there's certainly those who are kicking the can down the road. There are those who have benefited, massively, whether they're triple debt turnovers or not. And then there's others that maybe have slipped through the cracks or don't have such a high need for support. I think my key interest for the next period, and Richard, I know you kind of don't want to move on too quickly, but my key interest is the extent to which the CBILS and BBILS schemes will weigh down on mainstream lenders. Matt, you just said that about 8% of Metro's book is in these loans, and I know that the government obviously won't want to have its guarantees called upon without robust collection efforts being demonstrated. So it's going to be quite interesting to see to what extent mainstream lenders' ability to lend is constrained by a large back book of CBILS and BBILS. And I wonder, maybe Matt has a comment on that, or anyone else on the panel.
It's definitely going to be an interesting 12 months. I think insolvency practitioners are going to be particularly busy. Good question. We're starting to get ready for whatever comes next already. I don't know if any of you have seen the store we have in Bristol, but we're very fortunate that we've got a very big space. We're building a call centre above our unit in Bristol, which will employ 100 people. We built a collections team that will be based out of, or part of the collections team will be based out of Bristol. But do you know what? It's a really scary time, if I'm being honest with you, Finn. It's, you know, all you have to do is read the press, and different articles tell you between 20 and 70% of all bounce back loans will not be repaid. And, you know, if you think on the very risk averse side of things, that if 70% of a business's customers that you've provided a service to, and that turns into a bad debt, what impact would that have on any business? I think the big thing we'll see in the lending market heading forward is so two things. I think that as lenders, we have to take into account COVID debt and how that impacts the serviceability of any lending heading forward. I also think that sector will play a major role in how that sector has responded to COVID efforts. So as we've seen, you know, some sectors are absolutely booming as a result of COVID. So construction is the first sector that comes to mind as a sector that's done really well. What I also think will be interesting to see is those businesses who have done well through COVID against sector stereotypes. So, for example, if you have a hospitality business that's traded really well through COVID, how will they be able to lend money in the future when, you know, naturally the hospitality sector is probably one of the hardest hit sectors in the UK. Likewise, on the flip side, if you've got a construction sector, maybe a domestic interior designer, for example, that is probably in a booming sector because people are working at home, yet their business might have struggled because of COVID restrictions, or maybe, I don't know, the principal has had health conditions that they've had to isolate. It'll be interesting to see how that changes as we move forward. But yeah, it's going to be a really interesting 12 months, I think.
Yes, I think you're absolutely right. I mean, in my experience, so I mean, I'm typically working with clients that have been turned down by the high street banks. I mean, I'd like to think myself as a bit of a responsible, you know, broker, in that my advice to all my clients is, you know, if you approach your high street, you know, your bank first, because as you said, you know, the banks are always the cheapest lenders, although, you know, very conservative, you know, in their approach. I would challenge a little bit about what you said about some of the other lenders not being caring about loan coverage in terms of being able, you know, repayability. I mean, that is still, you know, across the whole market, that is absolutely key. Although I do think some of the more fintech trendy lenders have been relying a little bit too heavily on the government guarantee, and I think they'll come a cropper when the government say, well, you didn't ask some of the basic questions, you idiots. So, you know, tough, you know, go and get the money, particularly those that have opened themselves up to massive fraud. And I think it is interesting to what you said about, you know, the difference between somebody, you know, some sectors are basically closed as far as some lenders are concerned, you know, particularly hospitality. So, you know, it's thrilling to hear of somebody that's you know, managed to, you know, do well by, I guess, doing deliveries and takeaways, you know, instead of in-premise type hospitality. It's also probably worth just saying a bit, because I think Finn was mentioning about you know, the effect on some of the lenders' balance sheets. I mean, you know, we've used you know, Metro Bank as an example, with 8% of your lending being government schemes, but the British Business Bank has been, I think, as you know, one of their responsibilities has been to manage that. So, you know, not everybody will know, but each lender that has been approved under the CBILS scheme or bounce back scheme were given a limit in terms of how much they could lend, and also many of them were given specific criteria under the lending that they could. So as part of their proposal to British Business Bank, they had to say how they would underwrite the loans and which sectors they would be addressing and what sort of financial product they would bring forward. So I think there has probably been more management of it, which has probably developed over the 12 months than people perhaps realise. So if we just sort of like start to look forward, I mean, affordability of lending is going to be an issue, as we've discussed, in terms of the amount of money that people have to pay back. I mean, I know my personal situation is I've got a bounce back loan, which I've had to rely on for a few things, and that bill is going to come in from Metro Bank for me in I think May or June, and that's obviously income I've now got to find, and I'm very loath to kick it into the long grass again for 6 months by taking one of the options in terms of loan deferral again. I just don't want it hanging around. But there's going to be continuing need to borrow. And how do you think we're going to square that circle, Matt? So people on the one side, they're maxed out. Their current profitability over the last 12 months would indicate that they can't afford any more borrowing. Yet if they don't make any borrowing, they can't really restart because they've used the CBILS loans to sort of keep the lights on, as opposed to and now they're finding that they're starting up again and they need cash to oil the wheels to move themselves forward.
That's the ultimate question, isn't it? I think so. I think and what I'm seeing already is I think that people such as yourself, Richard, are going to get busier very, 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 very quickly, because I think the market for alternative lending is only going to increase, because as we've touched on, we as banks are pretty rigid when it comes to affordability, and very, very relatively strict criteria on what you can and can't afford, and I definitely think that having a relationship, and for us as banks to have relationships, or customers to have relationships with independent finance parties, will be really useful heading forward, just because of your vast array of criteria that you can tap into. I think that the next problem we're going to have to overcome, as I touched on earlier, is just starting the repayment of the loans, and I think that's the first hurdle that we need to overcome. I think that should be probably a business's primary concern rather than. So what am I trying to say? So what I'm trying to say is that we're already seeing lending requests for businesses who are looking to buy their commercial premises using the bounce back loan or the CBILS loan as a deposit, which clearly doesn't work, because that's 100% loan to value, which is not right. So we have to start taking that thing into account, which probably business owners need to start realizing as well at the same time. But like I said, I think in short answer, I think you're going to get busy very, very quickly.
Yeah, that could be good and bad. Yeah.
I just wanted to respond to that briefly, if I could, because I think one of the things that Matt said earlier as well was the sectoral dimension, and that some sectors have boomed through the pandemic, some sectors have suffered, and then within those sectors you have outliers. So your hospitality business that did really well, or your construction business that struggled, as Matt described earlier. I think you're also going to get the corollary to that when society sort of really opens up, when the vaccine deployment is completed, and thank goodness that things are going very well on that front so far, and the data coming out of its impact is looking very positive. But I think what we're not yet clear on is what the long-term impacts economically are going to be. How different will people's spending patterns be? There's a huge debate around this. I think the Bank of England are very optimistic, perhaps too optimistic on this, and there's a number of areas that it comes into play. So, for example, we've seen a de-urbanization to quite a great extent. So how much will people actually come back to city centres, or will they stay in their sort of more rural and sub-rural locations? Will people's spending patterns return to how they were before? I think it is likely amongst certain age groups and generations that there will be a sort of big glut of sort of consumer spending in things like entertainment, hospitality, kind of nightlife type of thing, once that is all opened up. But does that necessarily mean that existing patterns of spending from before is going to open up? I don't think so. And so that leaves businesses that have taken out loans on the basis that this is just a temporary blip and that they'll go back to previous trading patterns or even improved trading patterns from before the pandemic to repay those loans. It's unfortunately in some cases not going to happen. The question is, where are those places going to be? Is that kind of on a sector basis? Is that on a size basis? Or is it much more dependent on the specifics of each business? Obviously, these are kind of big questions with lots of sort of micro details to answer them. But I think that's kind of the main thing that is on my mind at the moment, is not just, the health and vitality of businesses as it is, and it's totally right to point out that some don't have a prospect of any turnover yet, so how are they supposed to pay back loans on the basis that they were sort of that the pandemic was going to be over by now, but also what are the long-term changes to the economy and to spending patterns, and how is that going to influence businesses' ability to repay?
I think it's also going to change people's, when I say corporate, I mean their businesses' behavior as well. So thinking purely from a professional services point of view, I think it will change people's relationships with their accountants, their lawyers, their banks, because so one of the big things that I've observed from the banking sector is, and what we're starting to see already, is where people haven't been able to contact their bank for support, it's made us realize that our business model, which is focused on customer service, is really starting to pay off. So that's the kind of thing that we're starting to see, because all businesses are looked after by a person rather than a call center. But I also think it will change people's relationship with their accountant as well, because I think we'll move from a tax minimization strategy when it comes to year-end accounts to maybe business owners will be keener to show a true reflection of business performance. Because that's how we assess, that's how we as banks have primarily assessed the affordability of any funding heading forward. And those businesses who have reduced tax or maybe taken big dividends have been, or taking all the value out of their balance sheet, have been hamstrung by that kind of technique over the last 12 months.
Phil, can we bring you in there? I mean, I think that's raised an interesting point in that some of the advice that accountants might give in the future versus what they were being given, pre-pandemic might have changed. I mean, in my personal situation, I'm so glad that I put all my staff on PAYE, or rather myself and my partner, was able to furlough my partner because she was on PAYE and not as a shareholder with dividends. I mean, I always believed in paying my fair share of tax, but it really, I'm glad I ignored my accountant's advice.
I mean, I agree. I think they did really expose a lot of companies with very undercapitalized balance sheets that had ripped it out through dividends or whatever over the years. So yeah, I can foresee a change in appetite for how directors hopefully manage their businesses and hopefully build a business with a stronger balance sheet that can withstand any future shocks we go through. So yeah, I think it's definitely going to feature. I know a lot of self-employed people, for instance, they were just locked out of any support, especially if they'd perhaps had some slightly dubious approaches to their tax returns. Likewise, directors solely remunerating themselves through dividends, difficult for them to put themselves on furlough. So yeah, I agree. I think there will be a shift in sort of approach moving forward, perhaps not necessarily driven by the accountants pushing whatever advice it is, but more by hopefully by the directors taking a longer view on the management of the companies.
Well, yeah. I think it will change. I mean, I have mixed sympathies for people that played the tax game. I must admit, it's you've got it's one thing being a Del Boy trotter and actually not paying income tax or VAT, but also not claiming benefit and not expecting benefits. Another thing where you don't pay tax and VAT, and then you expect the government to bail you out. I think that's the pigeons come home to roost. I know that probably will get me in trouble with a lot of people, but tough shit. So Sue and Mana, I mean, you're obviously talking to a lot of businesses and through the programs that you're running, and I guess you've what do you think those businesses are going to be expecting as they come out? What's your feelings in terms of their needs?
Well, we've certainly over the last several months, we through our colleagues in business rates teams, we've been supporting businesses with the various different business grants, and I think echoing what most of our colleagues have just said, the businesses, what we've learned from this is that there are certain sectors that are struggling more than other sectors, hospitality obviously being one, whereas other sectors have boomed. This obviously has had an impact on on their cash flow and paying staff, wages, etc., etc. One of the issues for us is that, and what we've learned from here, as you just said, Richard, is that if certainly those micro businesses or those self-employed individuals haven't administered their business in the correct way, and those are the kind of businesses that we're now seeing that are having difficulties in accessing the various different business grants, and Rishi always said in the one of the first announcements of the business grants, practically 10 months ago, that there will be some, individuals or businesses that will seep through the gaps in terms of not being able to access those various different business grants. And we're still, seeing those businesses come through and saying, they're just not eligible for those types of business grants for one reason or another. So, on a day in, day out kind of basis, businesses, micro businesses are struggling. I'm sure you see this day in, day out, with your high street businesses that you see. So, and there are various different, business grants. We've got this Thrive for the High Street initiative, which has been rolled out to various high streets within South Gloss, and I believe it's a 400k pot of money and support available to your high street retailers. What this pandemic has done has really made your retailers, your small businesses, look at their product offering, their services that they offer, and to really have a look at their their business going forward. And that's what it has for. So and that, as I said, will determine how well they will adapt to the new environment that we find ourselves in going forward. And that's whether you run a small business or whether you, like me, work in an office. There's the new way of working is totally different, and that obviously has an impact on how you run your day-to-day business.
Okay. And Sue?
Yeah, I mirror what Mana says. I mean, one thing this pandemic has done is it's forced businesses to look at their numbers and understand their business performance, understand where is their money going, what are they spending their money on, and what can they do to streamline their business to support themselves through the pandemic and going forwards. So we've worked with a large number of businesses where we've sat down with them, handheld them, and gone through their numbers retrospectively to help them identify what does the business need going forward in order to be sustainable and viable. So that's really forced them to do that. Can I just pick up on the comment you made around the dividends and tax?
Sure.
So I appreciate your viewpoint on that and understand why you made that comment, but I think we have to recognise that accountants are advising small businesses or directors on the most tax efficient salary to take, and businesses are going to accountancy firms and asking accountants because they don't know and they're using the accountant as an expert. So whilst not everybody is commercial, not all business owners are commercial and understand how taxes work. So I felt your comment was probably a little bit unfair in that accountants are doing their job by advising directors to on the ratio of dividends to PAYE, and those rules are there. The opportunity is there for these businesses to take that. So I think it's unfair to blame the directors for not for being in the situation they are when they're paying accountants to give them their advice, and that opportunity is there, supplied by the government.
Well, I take that on board, Sue. Yeah, I mean, I say some of these things to be a bit controversial and provoke discussion. I mean, obviously, I've got friends who have suffered greatly from that, and as I say, all the advice in setting up my business was to do what everybody else has done, and I, even though my politics are, I'm not a socialist by any stretch of the imagination. I've always believed in paying my fair share of tax, because at the end of the day, how do you pay for hospitals and schools? And that's just one of the fundamentals. I mean, I think, yes, I think it's one thing, me saying that to provoke, discussion, and it's another thing, actually, facing the reality of the advice that people have given. But, everybody has free will, and when people sit down and actually think about it, where the hell do they think hospitals and schools get paid for from? From tax. And if you don't pay tax, no point in complaining that Amazon don't pay any tax. Finn.
Just wanted to say I'm really glad to hear self-employed and sole traders come to the discussion, because of all the data and research that we've been doing recently, sole traders do act, behave, often think very differently from other types of small businesses, even micro businesses. They're a very interesting sort of market segment that are halfway between an individual and a business in the way that they express preferences, channels, their relationship with their banking providers. And I think one finding that came up in our work recently that I found quite interesting was that of all the different kind of mitigating actions that you can take to the coronavirus, or the ones that we sort of listed, whether that's applying for new products or C-bills or B-bills or spending reserves, raising fresh capital, et cetera, the only one where the self-employed or sole traders were above average was on selling their own assets, whereas all of the others, they were below average, and about 1 in 2 took no mitigating actions at all, which says to me that actually this is a market segment that doesn't really have many options and doesn't often have, either have on paper the affordability, or they don't have the assets to secure lending against, or any other kind of barriers to finance. That's the kind of topic of today's talk. So I think the self-employed are worth a sort of different lens in a way, whether it's around tax and accountancy, or purely from a psychological basis. These are individuals, one man or one woman bands, rather than a business with a sort of full business structure around them. And so I think it's worth thinking about those people to quite a strong degree, because unregistered business, in the Southwest at least, about half, that there are more unregistered businesses than there are registered businesses, i.e. there are more sole traders than there are SMEs. So, they're in a really, really key segment, especially as we sort of open the economy back up. So that's the first point. The second point I wanted to make is around cash. We've seen a huge reduction in cash over the last 10 years, and lots of powerful voices sort of pushing this agenda, Visa and MasterCard wanting to reduce cash, more and more contactless payments or cash-free business premises. And again, with the pandemic, a lot of people kind of having an aversion to cash, or thinking that it's a means of spreading the virus, even though there's no evidence for that, and in fact evidence against that. So I think businesses that rely on cash takings, or that are in sectors or subsectors that are cash heavy, cash dependent, and who have either been forced to reduce the amount of cash that they can take, or customers are more reluctant to use cash and so aren't coming through the doors as much. That's also going to be a key area in the future moving forward, is how is the kind of government policy agenda around cash services and access to cash going to play into this? How is consumer behavior towards cash going to play into this? And are those businesses able or willing to move away from cash, or to adapt their policy so that taking cash becomes, easier? And I think that there is some overlap between those two cohorts, the self-employed and the cash-heavy businesses. And I think those two areas will be two to watch quite closely as the economy opens up again.
So Matt, what's the attitude of Metro Bank to cash then?
What's the attitude towards cash? Good question. I mean, as long as the cash turnover of a business makes sense, why wouldn't we be interested in it? For example, if you've got a coffee shop that is 50% cash, why would that? There's no issue or challenge with that. As Finn mentioned, you would have expected that cash percentage to have dropped over the last 12 months, but that's down to consumer behaviour and individual behaviour rather than business behaviour. But there's nothing, as you can imagine, we've got restaurants and all types of businesses that still rely on an element of cash, although as Finn mentioned, is that reliance on cash has reduced because they've sought to innovate, I don't know if that's the right word, or change their internal behavior to hopefully increase their business's performance during this downturn, where there is less of an appetite to deal with cash. I think it's more of a consumer challenge rather than for me, I think that's a consumer behavioral pattern rather than an issue for banks and finance. I don't know, that would be my gut reaction to that.
Well, I think the reason that it's relevant to banks and financial providers, firstly, is if you're making an assessment of a business as to whether they're creditworthy or not, and they have a reliance on cash and the cash economy, then that's going to have an implication for your view on their prospects after the pandemic. But also, I don't fully agree that it's just a consumer behaviour. In some of the research we've done with individuals, a lot have reported being blocked by the business side from paying in cash, and that's certainly something that I know, in my experience, in my network, I know a lot of small businesses who've proactively chosen to refuse cash. There's also another element to it that's relevant to banking is cash services. If you're a business that takes on a lot of cash, but you don't have an accessible bank branch, or the bank branch refuses to take cash or takes a high percentage, all of which are happening in the banking sector. And Metro Bank, I'm glad to say, is one of the outliers in this regard, because you guys are still pursuing a branch strategy, and quite a prominent branch strategy. But by and large in the sector, and Phil, I appreciate that this doesn't necessarily apply to sort of non-bank lenders, but certainly, the accessibility of cash services is reducing, and so that does have an impact, a sort of impact on the business, rather than just being sort of consumer behaviour driven, I think. So again, these are just kind of considerations to bear in mind as we sort of forecast and plan, our emergence from the pandemic.
Yeah, it'd be interesting to see. I mean, I think there has been a decline in the use of cash over the last 20 years. I mean, it's an ongoing thing, and I think it's just like a lot of things during the pandemic, it's just been accelerated. It's a bit like the working from home and video conferencing. It's just been something that's sort of, it's inevitable. Businesses are having to pay for handling cash, and they, if they can avoid that they will. And I presume here we're talking about cash that is actually recorded, as opposed to cash that's used for avoiding tax. And obviously that's we'll see.
It's a really good point. Sorry, just to pick up on what Finn said, is that because of our, formerly our opening hours, which, we were open early in the morning till late at night, we want a lot of more cash intensive businesses because you can deposit your cash at 8 o'clock at night. And I feel sorry for those, I would say primarily the smaller businesses based in, if I think on the outskirts of Bristol rather than the city centre, let's just think about Bristol as a city here, where they've relied on their local Barclays, Lloyds, NatWest, and they've been a customer of theirs for 30 years, paying in their cash, and then, we are seeing a downturn in branches being open, or banks taking the decision to shut them. But on the flip side of things, I guess from the bank's point of view is, again, there's a partial understanding of that because I read an article that some branches saw 4 customers in a day, and depositing cash or check where they might charge 25p to deposit a check, for example, in the bank, and if you deposit 4 checks, that costs you £1, and that's the only customers you see in a day. Yet you've got the outlier of 4 staff, and that might cost you a couple £100 plus rent for the day. Again, I link it back to, if this wasn't a bank and this was a commercial, a standard SME business, and there's that difference between the income and the expenditure, that business owner would probably look at changing how they deal with their customers. But I mean, like I said, from our point of view, we want a lot of business because of that opening hours and presence, and we're relatively cheap for depositing cash.
Yeah, it's perhaps ironic that there's actually legislation saying that that cash machines can't be closed now. I mean, it's I think if there's not a cash machine within 3 miles of a cash machine, it can't be turned off. So there's legislation for consumers taking cash out of banks, but those businesses that then receive that cash, paying it in, it's a different situation. And a lot of the challenger banks, the fintechy banks like Starling and Monzo and the like, they recommend, they let you put it in through the post office, but of course, the post office is also, closing branches and moving them into much smaller premises as part of, the WH Smiths of the world or whatever. And the last thing they want is a small business turning up with, £500 worth of cash for their weekly takings or whatever, and then having a queue of half an hour behind them as they count it. Yeah. So we're past 11 o'clock now. So I think I'm just going to ask one more question to sort of round off the discussion. And so what I'd like to do is we've got the Chancellor's budget this afternoon. Clearly we've all polished our crystal balls and or been forward and back in our time machines. So just a quick round robin in terms of what would be one of the things that you would like the Chancellor to do, and one of the things that you absolutely think he shouldn't do, within the context of obviously access to finance for small businesses. So Phil, would you like to, as you're going to be writing your firm's briefing this evening after the actual announcements, what's your view?
Yeah, well, I think the view of my colleagues in the tax team are that probably there isn't going to be a great deal announced today. I think corporation tax is probably going to increase, widely reported. I think the main thing my clients are looking for in terms of something that's not going to change is on the capital gains tax side of it, and removing some of those allowances for entrepreneurs. So entrepreneurs relief being one, because there's a feeling that if they remove that, raise it too much, that could stifle some of the entrepreneurial appetite as we move out of lockdown and all these new potential businesses being formed and all the rest of it.
Okay, yeah. I mean, that's one thing that has been discussed a lot about the change in capital gains tax, but I think you're right. I don't think he'll touch it. Matt, what's your one thing you'd like him to do and one thing you wouldn't like him to do?
I guess I could probably talk from my customer's point of view in terms of what we're seeing, and I was reading this morning about these the restart grants, so maybe some clarity over what additional funding there is going to be for businesses, if there is going to be any. And it's going to be really interesting, again, as I've touched on throughout, what guidance there's going to be on CBILS and the bounce back loan. I think that's the primary challenge from what my customers have. The challenge with us is, what is CBILS and the bounce back loan going to look like heading forward, given, we're still 12 months in this and there's not, June 21st or whatever is the expected outline. But how does repayment deal with that? And are there going to be any changes? Is there going to be a version 2 to any of this? Would be the interesting thing to see.
Yeah, absolutely. Finn?
Yeah, I think it's not going to happen today, but I think in an ideal world, I'd love to see a little bit more on these sort of digital giants. I know that's a much bigger question. It was briefly mentioned earlier, Amazon, Facebook, Google, and the like. I think they will play a really key role, or they should play a really key role in building back after COVID. But in terms of sort of more realistically and in the more short term, I kind of agree with Matt. I think greater guidance, greater certainty around how these sorts of loan schemes are going to be wound up is certainly needed. And on the negative side as to what we shouldn't see, I think, I agree with a lot of the sort of commentary that's been around. I think it's too early to really start raising taxes in a significant way, or to sort of choke off any sort of nascent positivity and enthusiasm for the reopening. So I think, let businesses get back on their feet first, sort out what we're going to do with, the extensive CBILS and BBILS legacy book, and then start talking about tax rises after that.
Mm-hmm. And Sue, have you got any views on the budget?
I agree with Finn. I think it's too early to start putting, putting taxes up. I know what Matt said around corporation tax, but it is too early. And the focus does need to be on, what's going to happen going forward on BBILS and CBILS, how can an additional funding for these small businesses enable them to reopen and start to thrive.
Yeah, I absolutely agree. I think putting the taxes up now, whether they put them up now or next March, it's not going to make a very significant difference unless they put them up by a considerable amount, and he's not going to do that. So why tinker with them at all? Because he's only going to have to lend find other ways of businesses actually being able to pay for those tax rises. So, but we'll see in a few hours time. So I'd like to thank Phil, Matt, and Finn for participate in the discussion. I think it's been very collaborative, and I think that's been great. And Sue, thank you very much for attending, and thank you for putting up with my provocative comments. And so Pete, thank you very much for laying it on.
Well, thank you one and all. It's been really interesting to just to hear that blend of conversation, very useful, and certainly very timely on the day of the budget as well, and just picking up on those last few points. And yeah, I can see where you're all coming from, and I think, as we know, politics is driven heavily by the press and media and fast communications. And actually, if there was ever a time for a bit of cool, calm planning, now's it. So thank you one and all. Really great discussion, much appreciated, and see you again soon.
All right. Well, thank you very much.
Thanks very much.
Take care.
Bye.